lectures. And this is the final one in this series of our CHADS lectures. So many of you will be very familiar, I think, with the technicalities. So you can choose to look on gallery view or on speaker view. It would be good if you could keep your mute button on, because that helps the sound quality. It takes out some of the distracting sounds from whichever world you happen to be in. And it's lovely if you're willing to show your face. We will be recording this and it will go onto the college website in due course. So some of you may prefer not to be visible or not to be seen. But I think it's helpful, and partly I just love seeing your faces, but it's also, I think, helpful for our speaker if he has a little bit of a sense of who he's speaking to. So a plea to show yourselves if you're willing. Thank you very much. So we've tried to go for variety. Pets are also very welcome. So I see a nice cat there, and I don't know if Eddie, the chaplain's dog, is also listening in. So we have very, very well-educated pets in St. Chad's. So lovely to see you as well. We've gone for variety in this series to make sure that we're all kind of as widely educated as possible, and also to cater for a variety of interests. And this evening, I'm really delighted to welcome another relatively new member of the St. Chad's SCR. That's Chris Sparks, who's Chief Risk Officer for Atom Bank. And I love his title and his alternative title. So Commerce and COVID, or We're All Risk Managers Now. So Chris, over to you, and very much looking forward to what I'm sure will be a very thought-provoking session. Thank you.
Everyone, and thank you for zooming in on me tonight. I know that there are far more interesting things that you could be doing, like sitting out wine. So I am very grateful to have an audience tonight. And so let me introduce myself. My name Bank. We're head here in Durham, which is something in and of itself. I also noticed that somewhat disquieting, because it's only my mum that ever calls me Christopher Sparks, and that's usually when I've done something bad. So, the other thing to point out is I do have the benefit of a bookcase, which as my backdrop, and it's not wallpaper as most of my colleagues seem to think it is. For to talk to you this evening, I'm very grateful as a relatively new member of St. Chad's Senior Common Room to be given this opportunity. I really hope to get to see you face to face at some point, and maybe the talk that I give tonight will give us some possibility of that and how that might occur over time. I think the other thing I should say, my employer would want my own, all the biases, all the wrong thinking, they're owned by me and have nothing to do with Atom. We're all listening to the books in this series. The breadth of areas covered has been fantastic, and the speakers presenter. So this evening, I intend to bring you down to earth after our trip to the planets, and after our journeys through prosaic subject of banking and risk, and whether that could or couldn't give you some insight. We've been dealing with the COVID emergency that's all around us. Margaret asked me just to give a talk and to see whether I had any observations on the given my chief risk officer. So risk is what I think about every day, and so this sort of sits slap bang in the what I do. Can you hear me now? I've moved onto a different internet connection. Is that a little bit better?
Yes.
Good. Good. So maybe I'll start sharing the screen, at least get the first slide up. Okay, can you all see that?
Yes.
Great. So I've called the talk Commerce and COVID, or We're All Risk Managers Now. And it was chosen firstly to the impact that COVID is having on the economy, and how the structures of the economy are working to help support the country. And that was the first link really that I saw between what I do in Atom Bank and the environment that we currently find ourselves in. But when I thought about it a little bit more deeply, there was also there were also connections at a more fundamental level, and by that I mean the kind of models and processes that we use within banking have sort of analogues with when we look at how COVID has been examined and managed. So that was why I chose the sort of commerce and COVID. I also wanted to introduce you to what Atom is and who we are. But we're all risk managers now, I think, is a really important part of this, because this is a way in which risk has come onto the main stage in society. And as a risk manager, I'm very interested to see how people are now consciously thinking about risk and integrating that into the way they live their lives. So hopefully by listening to me this evening, you'll have an appreciation of who this new member of Chad's Senior Common Room is. You'll have an idea about Atom Bank, what it does, why it's based here in Durham. The types of things that a chief risk officer would look at in a bank, how the methodologies that we use when examining risk could provide maybe a window into the issues facing us in this pandemic, and then sort of pull out from that sort of micro level and think about how that might give us a perspective on the decisions that the government were faced with at the beginning of this crisis and how they've operated and performed during that. And then really just to finish with about how risk has become a conscious part in our everyday lives. So who am I? This is me pre-COVID. You'll notice a very sharp haircut. I think I can get a ponytail into what I've got now. A bright smile, clear eyes. And now after weeks and weeks of staring into this camera, goodness knows, not the same person, I don't think. And my hair has certainly grown a bit. And I think what I'm lacking in coverage, I'm making it up for in length. And if the camera was to be able to come down a little bit further, you'd see that that was a lot slimmer version of the bloke that you see in front of you today. So this picture amused me because it was used, a similar picture, and these words were used on a great big life-size banner that Atom took around to events it went to. And it had my picture on it, and it said, "Born and bred in the Northeast." Well, the first thing that you need to know about me is I wasn't born and bred in the Northeast. I was born and bred in the Northwest. I come from Liverpool, and that's the team I support. It was Atom Bank that was born and bred in the Northeast. But it did amuse me that in a business with lots of people, they chose the Scouser to be the representative of the Northeast. So there you go. That's me. Move on now. My background really, to give you some, so you get to know who your new SCR member is. I've worked in banking for about 25 years, and I've predominantly worked in risk. I've worked for HSBC, for GE Capital, Royal Bank of Scotland, for Virgin Money. And I'm currently the Chief Risk Officer here in Atom Bank. I moved to here about 5 years ago, and from Edinburgh, and I live just at the top of Claypath, the early part of Gilesgate. That is also my work address at the moment as well, because we've all decamped, and this is where I do my day-to-day working from. So before that, and before I became a banker, I was an academic, and I worked at Birmingham University lecturing in operational research, which, as some of you may know, is about applying mathematical models to real-world problems. I like to think of it as a bit of a finishing school for mathematicians and statisticians. And I really enjoyed it, and I took that skill set and I've applied it in banking for the past 25 years. So I've always had a close affiliation with education and universities, even since I've left. Currently, I sit on the advisory board for computer science here at Durham, and I'm a member of the research advisory board for Credit Research Centre at the Edinburgh Business School. So how did I end up in Durham? Well, I got a call from someone, said, would you like to take a role in a bank that isn't yet a bank? It's starting up in Durham, and it's going to be a very different bank. It's not going to have any branches whatsoever. It's all going to be based on one of these things, just on. And as you can see, after having spent a large portion of my career in some of the very big names in banking, this was a very risky decision for me to take, but one that I thought I couldn't turn down. The chance to become the chief risk officer of a bank that was doing something completely new, and I thought long and hard about it, and was advised by plenty of people that this was far too risky a thing to do, and you shouldn't be messing around with your career taking chances like that, especially not if you want to be a CRO. But no, I thought, well, let's go for it. If nothing ventured, nothing gained. And I think that's sort of an important part of what risk management is about. Risk management isn't about not taking any risks. Risk management is about understanding the risks and trying to manage them and decide where you're going to go. Which ones are worth taking and which ones are too dangerous to take. But came down to Durham and was very pleased with what I saw here, and so was my wife, more importantly. And we're delighted to be here and now involved with the university as well, and with Chads. The why Atom is a good question as well, and it won't have escaped your attention that banking hasn't necessarily been the darling of society for many years now. It's got a bad reputation. It went out and made a lot of money in dubious ways by charging people insurance premiums that they didn't need. And as an individual, that wasn't something I was happy about. I worked in RBS as it nearly crashed the country. I stayed with RBS to try and pick it up. But I did give a lot of thought to what went wrong and why I wanted to move away from banking, and I did. But I figured that that was the easy way out, and that the better way was to look at what went wrong in banking and find a bank that you could influence from the start and really actually make a difference and create a bank that does the right thing. So this is one of the slides that we have and use, and it describes what Atom's about. It says, Atom's simply here to do the right thing by customers, to stand up for them, to save them time, and to offer them genuine value, empowering them to take control of their finances. So I thought about that and thought, this is, having spoken to them, this is a bank that wants to do the right thing. And to me, that was a very important part of why I came to here. So when I joined them, Atom had a team of about 50 people. It literally had just been granted its banking license with restrictions. So that was 5 years and 1 day ago. And here we are, we're still here. We now have about 400 people working for us. It was very exciting. It was a bank that was based on an app, and it also was very leading edge. It used biometric recognition for you to gain access to it. And for me, very safe bank. And that's super important if you take the you have to be approved by the FCA to take the role on, and it's a senior. It's a very senior role, and it's subject to a lot of oversight from the regulator. and literally the responsibility stops with you, and they can come after you if it does go wrong. So to me, again, it's important that when you're looking at a decision to think about the risks associated with it, and taking this choice was a risky choice in some ways because it was a new bank, but in many others it wasn't, because I felt it was a very secure bank. No one can get access to my bank account in Atom unless they steal my phone. It has to go through my own phone, not anybody else's. To get into the app, you have to get through the phone security. You then have to get through Atom security, which will be either biometrics, your face or your voice, or a PIN number to be able to get in. So I thought, well, from a fraud perspective, it's well wants to do the right thing from I've not looked back. This is the best job. So why did Atom come here? It was, it wants to change banking permanently and for the better. Its CEO is a super well-respected bank, common. It chose Durham as its HQ. It really wanted to take a stance against everything having to be in London and the city. And I think that's important as well, when you think about the university and how it works to attract people. Durham isn't the most obvious place for people to think to come first from a geographical perspective. But I believe now in a digital environment, some of those boundaries, some of those obstacles are disappearing. And the very fact that COVID has forced us all into a digital world, I think has changed people's minds about this. And so I think that this gives us a real opportunity. It's also got great and talented people. And we just wanted to make the point that, have I disappeared?
You're okay? We're still hearing you.
Okay, that's good. So we launched fixed savings and then residential mortgages and secured business lending. To give you some idea of the scale of things, so far we've raised £454 million in capital to get this business moving, and there's probably more to come yet. We have taken 1.8 billion in savings. We've lent over nearly £2.5 billion to small businesses and homeowners. So you can see that we've got in and we've stuck our foot in the door. We've announced our presence, and for our customers, we're doing really, really well. You know, we're the #1 rated bank on Trustpilot with the highest trust score, and have a net promoter score, which is a leading, industry leading score of +76. But we're not only about building the bank, we're also trying to get ourselves involved very much into the community. So if I go on to the next slide, you'll see a picture of some of the sorts of things that we're getting up to. This is a lovely photograph, I think, of us in the computer science department, working with Anne-Marie and Sue on a STEMettes event where we brought in girls from around the county to have a day working on a STEM subject, learning how to do computing, demystifying it for them, making this look like it was something that that they could get involved in. And it's not only that we're involved in. We're a lead partner with the Prince's Trust, and we also have a number of people that get involved with local schools. I, for example, am a chair of governors at Trinity Special School here in Durham. So it's very much encouraged that Atom just doesn't, so people don't just come to work and then go home. We're trying to make sure that we're a really active and vibrant part of this community. So I move on from that and talk a little bit about risk management. Now, it's worth pausing and thinking about what we mean by risk. There are numerous definitions of risk, and lots of people talking about it. I watched a very interesting thing on YouTube from Mary Beard talking about risk and humanities, where she was going back in time. I think it was a Darwin lecture from last year. She went back to Roman times and was talking about what risk meant to people then. Was it something they really thought about? So it's been there for a long time. But I like this thing here. The revolutionary idea that defines the boundary between modern times and the past is the mastery of risk, the notion that the future is more than a whim of the gods, and that men and women are not passive before nature. That's a quote from that book, if you can see it, by Peter Bernstein. And I think that it's a really important view. This is about saying that we don't just have to be a victim of fate. We can actually master that. We can do something about it. We can think about it. We can model it. We can predict it, and we can move forward. So how did that translate to, here I am in Atom trying to explain risk to now 400 employees. And what I came up with was we had a little book of risk, which is an acronym came out as LIBOR. For those of you in banking, that's quite an amusing joke, but those of you not might get it. But fundamentally for Atom, banking is the business of risk. It's about knowing how to identify, structure, manage, price for, and monitor risks. And that isn't something that's imposed on people. There's also this idea that risk is the responsibility of every one of us. And I'm casting that out into all of our employees, saying that, yes, there's a risk function, but that doesn't absolve you of the responsibility of managing risk. Risk is your responsibility. It's not just Chris's and his little team's responsibility. And again, I want us to think about that in the context of COVID, because we get a lot of, we must do this, we must do that, and there's a national approach to it. But fundamentally, how we act as individuals is super important to whether that can be successful. The analog in banking is called risk appetite. And risk appetite, I like to think of something as something that just defines the boundaries. It's like putting a fence outside your house and saying the kids can go out and play in the garden, but they can't go past the fence, because if they go past the fence, they're on the road and they're playing with the traffic, and that's too dangerous. And what risk functions do and boards do are set the boundaries within which businesses can operate. And within that, they go play where they like. They can do what they like. But they must be aware of the risks that they're taking individually. And I think that's important for us in COVID to think about the risks that we individually take. And also the link between the risks you take as an individual and the impact that has on other people who may not have chosen to take that risk. And I think that's a really interesting thought about how the clash between individuality and between a collective approach, a societal approach to what's going on. So that's a little bit about what I think of risk. And I want to go on from there and now and just talk about risk management as a process. Because to me, it is a process. It's a process of identification and measurement. And then there's a period of design and implementation of systems that allow you to control and mitigate the impact of risks that you've identified and measured. And this is as applicable to banks as it is to running nuclear power plants, as it is to driving a car or managing a pandemic. Now, in a bank, there are lots and lots of different types of risk that we have to manage. Regulatory risk, that we get on the wrong side of the regulator and the regulator fines us. There's conduct risk, people start doing bad things and misbehaving themselves. There's market risk, that we have a position in the market and interest rates change and we find we've lost lots of money. There's reputational risk. If our app doesn't work and people start slating it in the press, that's not a good thing for us. Model risk, banks have got lots and lots and lots of models. Camilla will vouch for that. But the two I want to talk about tonight are operational risk and credit risk. Now, credit risk, it goes a long way back. I quite like the advice of Polonius about a loan oft loses both itself and friend. And that's very true. And credit risk is really about trying to mitigate that risk. We want to make sure that we lend to people that can afford to pay us back, that we don't lend to people that can't afford to pay us back, or where lending to them would put them into a worse position. Credit in society is meant to oil the wheels of commerce and to make the economy move. And in the climate we currently have, that's a very important concept that I'm going to come back to. Operational risk is about internal processes, human error. It's about external events. How do you manage them? And what do you do? The key approach to that is around scenario analysis. We try and imagine what would happen, and we think about what the risk is. We discuss that, we model it, we then think about what kind of things we can do to mitigate it, and then we understand what residual risk we will have once we put the mitigations in. And the residual risk is measured against this boundary fence of risk appetite. So one of the risks is around business continuity. And no surprise to anyone, we have a business continuity plan at Atom like anybody else. And our business continuity plan had thought that had one of its main risks of a pandemic. And it had flu, and what would happen if we had lots of people go down with the flu, how would we manage? And the idea was that we would just move, if that was the case, we would look to see whether we could invoke our recovery sites and spread people around a bit to minimize the concentration risk, i.e. people too close together, being able to spread the disease. So we had a basic template. We'd done what I like to think of as the exam prep. It's very much like revising for an exam. You never know what question's going to come up, but my experience was the more past papers I did, the luckier I got on the actual exam day. So risk is not too different from that. For us, and for me, because I guess I'm the chief risk person, I was watching what was happening in China in January, and I was looking at the signs and thinking, you know, that doesn't look too good. And noticing that they locked down Wuhan, noticing that they were soldering people into their flats, noticing that they were grabbing people and taking them and forcibly quarantining them, I thought, this sounds like it's very serious. And if it gets out of China and spreads, then how would we react to that? Because I have to make sure that the bank can actually operate. So we moved well before the government actually told us to move. And we got our people out of the building, starting first with people that had illnesses that might make them more susceptible, in our opinion. And as a digital bank, I think we had an advantage. We were used to people working from home. We had the technology to be able to do this. We're a cloud-based bank. We got everybody out. And do you know what? We haven't seen a flicker in terms of our customer service metrics. Everything has worked absolutely perfectly, he says, clinging onto the wood of his desk in a very superstitious way. So that was an example of how op risk has worked and risk in banking has reacted to the COVID emergency. And as it happens, we're now in the process of very gradually bringing some people back to our Akeley Head site. Credit risk. You can only, as a credit risk person, this COVID emergency is a big concern because it's a huge shock to businesses. I lend money to businesses, and again, going against Polonius's advice not to be a lender. But if that money's out there and someone has lost their job or their business is no longer viable, they can't pay me back. That's a concern to me, because then that's a drag on my capital and my shareholders' value, and it puts the bank in a difficult position. And the normal response of a bank, an individual bank, would be to batten down the hatches. Don't lend out to people, keep very close to all your customers, make sure you don't lend any more out, and really just tighten everything up, raise provisions against what you think you might lose. And guess what? You're actually pulling the lifeblood away from the economy by doing that. So by acting that way, which is absolutely correct for your shareholders and for the survivability of your bank, you're doing exactly the wrong thing for the economy, and you get this sort of pro-cyclical impact. And the government understands that, it literally understood this, and acted, in my opinion, very, very decisively and quickly, as we'll come on to, with schemes like furloughing, so that people didn't lose their jobs and didn't lose confidence and could keep spending, like the coronavirus business interruption loan scheme, like the bounce back loan schemes. All of these to try and bridge this period of difficulty that we've got. So that's really helped us, that's helped the banking industry to help the economy and to try and keep this country on its feet in the face of well, I think you'd probably have to go back about 200 or 300 years to see something as severe as this, as an economic shock. And with the uncertainty of Brexit still looming in the near distance for us. So what was the national response? Well, I think that there were at least two objectives in the national response. There was one around the health of the nation and the capacity of the health service, and the other was around the health of the economy. Now, if you wind the clock back, and I know it seems like years ago, but it wasn't. It was just a very few weeks ago when this started to unfold. There was confusion, but there were signs, in my opinion. You know, if I could see that China throwing up a 1,000-bed hospital in 6 days was a worrisome sign, I'm pretty sure that the government should have thought it was a worrisome sign. And yet, I think if you look at it, there were some mixed messages. There was the Prime Minister Johnson on the TV saying that maybe this was something that we should just let rip through the country, take it on the chin, and promoting an idea of herd immunity. I don't know. I don't think they actually understood how they were choosing between the two objectives of economy and of health. But as the saying goes, he who hesitates is lost. And I think that they did lose time at the beginning of this. They didn't act decisively enough, in my opinion. And if I look at it with my risk lens on, I'm looking at this. If I'm assessing credit, I look at people in terms of the probability of default. I look at them in terms of the loss given default. So a probability of default is the chance that you'll go bad if I give you a loan. Before that, there's would you even become a customer of mine? And I'll come on to that in a minute. And the loss given default is really, if you do get into difficulty, how bad will it be? And I started to see some analogues between that way of thinking and the emergency. So if I move on a little bit, clearly the operational response for us was quite successful. It did annoy our chief operating officer, by the way, because he'd just been on holiday in Vietnam, and on his way back before quarantine had been thought of in this country, we told him that he had to go and sit in his house for 3 weeks. Ironic that he was probably safer in Vietnam than he was in the UK at the time, but there you go. So come back to the credit and the credit life cycle, and this is just a sort of an analogy that came to me when I was thinking about this presentation. And one of the things that a bank does is it markets customers. And if I show you this is Atom's marketing. I don't. Can you read that? It's quite small print deliberately. So the first one says, "I can't read the small print," and the bank manager says, "Nobody can, mate. That's the idea." And then underneath, "Do you want a bank that works for you?" The next one is on mortgages, saying, "So congratulations on scraping together enough for a deposit. Now I just need to check you've got enough for our hidden fees and charges." So it's sort of it's a knowing view from Atom. It's a position as anti-establishment, and it's got wit and irreverence written all the way through it. And that was, so we're targeting people with that. Certain people will like that and be amused by it and want to bank with you. So we've gone out and done some marketing. If you think about the virus and marketing, that's a niche marketing. We're going for a certain bunch of people, millennials, effectively, people in their 20s thinking about getting onto the mortgage ladder, and we're targeting them. And I thought, well, the virus is doing a bit of a marketing job as well, but its marketing isn't niche. It's very much mass market, because as far as I'm aware, no one's got any real immunity to it. And at the moment, it's run a campaign where it's managed to attract 5% of the population. So according to the figures I looked at, the government believes now that 1 in 20 of us have actually had COVID-19. So herd immunity would seem a long way off if it's still got 95 out of 100 people to go after. And it's very interesting to give in this talk just after we've been told that we can loosen up and let everybody out and have fun. So if I'm in credit, the credit business, I'll credit score you. I'll look and see, what's the likelihood that you will get into difficulty and won't be able to pay me back. And I can see an analogy now coming through with some local and national modeling that's going on with the disease, where doctors and GPs are being given access to a scorecard that will allow them to assess how likely you are to, if you caught the disease, to be able to need treatment. So again, a big parallel there. And then there is the sort of the more morbid end of it, and it is very sad, but not everyone survives this. And the analogy in banks is not everyone gets to pay back their loan. And we put them through treatment, and we call it treatment. So the narrative analogy is there of collections, trying to find out what people can afford, trying to support them to get back and get their credit stance into a good place. But not everyone can. And the same, I think, is the obvious analogy sits there with health. So what? The government's faced with no easy choices here. In banking, I can forecast the odds of someone paying me back with astonishing accuracy. I also understand the elasticity of those odds if the economy moves in a different direction. And I can hold capital to protect me against those sorts of tail events. The government had no real data when this first came out to calibrate. It didn't know whether this was a niche event or whether it is a mass market event. There was a huge range of possibilities. And it struck me that that there's a phrase they use all the time about we're following the science, as if there is only one science. If I cast my mind back, there were differently, depending on which epidemiologist you chose to listen to, there were varying views that in February and March, that there were either 1% of the population had been infected or half the population had been infected. Now, with that lack of clarity, it seems to me that taking a risk management approach, an operational risk approach, you would have looked at this and thought, what's the worst that can happen, and you would have thought about how you would manage that. I think that they probably did that far more effectively on the economic side of things than they did on the health side. And if you look at what they did on the economy, I think that was fantastic. It was swift, it was decisive. As soon as the lockdown came in, they responded immediately. And so today, by May, we had 8 million people on furlough being paid and kept as somebody that can feed into the economy. We had 2 million people on self-employed income support. By June, we had over 900,000 companies had taken a bounce back loan for about just under 28 billion pounds. We had over 50,000 business had taken a coronavirus business interruption loan worth about 10 billion pounds, and about 2 billion pounds on large coronavirus business interruption loans. They'd also worked to reduce interest rates, and there was a whole machinery that kicked in, and the UK government, via the Treasury and the Bank of England, made it possible for us to respond. They changed. They recognised that the capital buffers that they'd made banks build up since the last crisis were now available to be used to help service the economy. So moving from the individual view into the societal view from a banking perspective. And I think that that's been a magnificent response from the government. So it's a bit of a score draw. I think they've done very well on the economy. I think they were a bit slow off the mark on health. But having said all that, it was really difficult. They didn't have a lot of past experience to go on, and that always makes it tricky. I forget which scientist it was that says forecasting is difficult, especially when it's about the future, but he was right. The other thing to remember here is that there are no prizes in risk or politics for dodging a bullet that was simply a forecast. So if I tell you something's going to get really bad and I make you lock down and then it doesn't get really bad, every conspiracy theorist is going to tell you that you didn't need to be locked down, that it wasn't that bad in the first place because look, no one got ill. I've seen that in risk management as well. Typically with fraud. Fraudsters find new ways to attack banks. We can imagine how they may attack banks, but that usually costs money. Business cases usually require you to show that you've lost money physically before they'll invest. So I saw one bank where they lost millions of dollars in fraud losses. That could have been prevented with a very minor investment, but because it had never happened before, no one would buy into doing it. So I think there's a lot of sympathy we can have for the government's treatment, and it's always easy in hindsight to criticise. So where does that leave us? I think it sort of leaves us now having to listen to what the government's saying. Still 95 out of 100 of us haven't had this. Even if we had it, we don't know whether we've got immunity to it. We're now being told that we can go out and we can lessen the lockdown. I think that that's probably a necessary and balanced risk to keep the country moving. But at the same time, I think you've got to think about this risk from your own personal perspective and make sure that you do obey the rules and act sensibly. So risk management's not about not having fun. It really is just about having fun, but safely. So that's me. I'm sure there was lots more I could have talked about.
Great, thank you very, very much, Chris. So I think we're going to risk you stopping your sharing of your screen.
Yeah.
And David's going to switch your camera back on. He switched your camera off just to try and improve the visual, the sound quality, which was pretty good for the most part.
Okay, thank you.
Yeah. So we're going to try and see your face again, which would be lovely. But if if that affects the sound, then David's going to just switch your camera off. So, but let's try that.
There's me.
Great. So lots and lots of very interesting angles that we could come at this from. So I think there's probably, yeah, I think we can probably manage this with just people putting their hands up if you want to speak, if you want to kind of ask a question, make an observation. Please feel free just to launch in. I'm happy to kick off while people are gathering their thoughts. Really interested to hear what you have to say, Chris, because of course, as you say, we're all risk managers now. And one of the things we've been trying to do in the college is do lots of scenario planning and managing risk. And, you know, in some of the conversations with the university, that's been very interesting. You know, we're very focused on safety. So we want students to come back and be safe. But we also have to manage the risk that if we bring them back and we focus so much on safety that they think, why am I even here? That's another risk, you know, so it's balancing the risks of actual possible danger, but also the risk of failing to do things and missing doing things and not taking risks that is in itself a risk. So it's been fascinating to kind of, you know, think of those risks in the context of what you've been saying.
Yeah, I think that's at the heart of risk management. Risk management, as I said at the beginning, isn't about risk avoidance. It's about recognizing that the world's a dangerous place, but we have to live in it, and you can't wrap yourself up in cotton wool and avoid it, because by doing that, you know, you create another problem for yourself. And I think with looking at the students, you know, we need to think about what the risks are to the students, and you know, is this a disease that really affects them very badly, or are they the vast majority? In my credit example, the vast majority of people pay back with no bother, and from what we can gather here, about 80% of people are perfectly okay. It's a mild disease. And it's also based on your demographics. So the younger you are, the safer it is. So me at my advanced age, I'm quite happy to be working from home. The younger people at Atom are very keen to get back.
One of the other things we have to balance in you know, are often older. You know, some of them have underlying health conditions. So again, it's balancing the, you know, those very different kinds of risks, I think.
It is, yeah, and that was the first port of call for us in Atom. We looked at, we asked people who had underlying health conditions and told them, you know, you need to go work from home now, today. Out you go. They were a bit surprised, but I think in retrospect, very, very grateful that we acted in a timely fashion.
Yeah. So I'm sure we've all got opinions about risk and about, you know, what's been going on with vis-a-vis COVID. Just if you just want to put your hand up or somehow indicate, or just unmute yourself and feel free to speak. Ian.
Hello. You're on mute, Ian.
So just unmute yourself and then. Yep.
Thanks for that. Bounce back, the bounce back payments, which were recently released. Now, there's a rumour going around that there's been a huge increase in the sale of Maseratis and others as a result of this. Well, here's a real risk. How experience of this in Atom, and how would you tackle it?
Oh, it's yes, I've heard the same thing. Well, I was joking with someone about this, because if someone's gone out and bought themselves a Maserati with my £50,000, then if they don't pay me back, at least I've got a reasonable item I can go and chase them for. They've got something with some value. If they've gone and spent it on something that was irretrievable. Yes, absolutely. But it's the government. You know, this is a really interesting question, and you know, that scheme really doesn't want the banks to look very closely at it doesn't want these deals underwritten, and the reason for that is it wants to make sure that this money gets out. Now, it can either dish it out through this approach, or it could just give grants out to people directly. But you've got an infrastructure that knows how to put money out, how to collect on money, and how to manage it, called banks. So why wouldn't you use them? But the point is, we're trying to create a bridge between this pre-COVID economy and a post-COVID economy, and make sure that businesses can actually be there. Now, undoubtedly, there are going to be some people that just decide to abuse this scheme. I don't think there's a lot we can do about that. If you know, it's more important that we keep the good people well-oiled than worry too much about the bad people. It's a good question. Thank you.
Corin.
Hello, Corin.
Hi, thank you. That was, can you hear me?
Yes, yes.
That was a really fascinating talk. Thank you. I was wondering if you could say anything about how in the news there's been reports that higher rates of COVID have been found in places that are less socio-economically well off, and also places that tend to have more ethnic minority populations. I was just wondering how that could be related to risk, and possibly if you had any ideas about that, just out of curiosity.
Probably not. I'm not an epidemiologist or a doctor. But what I would say, it's interesting that ethnicity from a credit perspective, if you're in the States, a credit scorecard, when I'm deciding to give you a loan, literally it's not allowed to discriminate based on ethnicity, even if ethnicity would be a statistically valid characteristic to say whether someone would pay you back or not. But in a medical emergency, I think like this COVID crisis, it's really important that the medical models actually fully understand the people that are most at risk. And these statistical models will be developed and will be able to point out that you are most at risk, not because they understand why you're at risk, but just because that they've seen the correlation there. And that's an interesting difference in risk modeling, about whether it's causation or whether it's correlation. And I'm sure Camilla would be able to wax lyrical about that.
Thank you. That's interesting.
Thanks.
If I could just take that question a little bit further, and Camilla may want to come in, I don't know, but certainly early on in the crisis, a lot of weight was put on sort of mathematical modelling, wasn't it?
Yes.
How comfortable were you with that? Because presumably a model is just a construct and it's potentially flawed, and yet we were putting huge weight on that. And I guess you've got to trust something. But I'm just curious how you felt as a risk manager watching the government make massive decisions for all of us based on one person's modelling. Well, not one person's, but a team's modelling.
Yeah. Well, it's again a good question. It left me worried. I mean, there's a saying that all models are wrong, but some are useful. And so putting your trust into it, explicit trust into it is concerning. And I guess that's one of the things I was trying to bring out, that for me, risk management is about looking at the range of things that might happen, the fan chart of outcomes, and understanding whether any of them are unacceptable to you. Now, I got interested in risk when I was doing my master's way back when Mrs. Thatcher was in power. And I remember the example they used was of an oil exploration company, a big oil company in Canada, and it had put a drill into the sea, and it was drilling down. It struck oil, it brought the oil back on shore, and that drill disappeared. But they did an analysis afterwards that said, do you know what, this was in iceberg flow country, and there's a certain rate at which these big icebergs float past this area, and what would have happened if one had hit it, and what was the chances of one hitting it? And I think they figured there was, I don't quote me on this, but there was a reasonable probability that this thing would have been hit, and if it had, could have took the company down because of the environmental costs of bringing it together. So someone had bet the company, and I just think that, you know, on one thing, they'd taken too much of a risk. They hadn't really looked at what the range of possible outcomes were, and the government just saying that this is the one model. Well, that was concerning. I had a quote from a guy, Michael Saunders, who's an external member of the Monetary Policy Committee, and he said that risk management considerations favour a relatively prompt and aggressive response to downside risks. Now, that was a very sensible statement, in my opinion, and that, I think, that's a very sensible response, because it's looked at what the range of outcomes are. It's realized that the downside one was totally unacceptable and had a reasonable probability of happening, and therefore needed to be mitigated. So yeah, I was concerned and I still am concerned when they talk about we're following the science, because I don't think the science actually is well formed yet.
I was going to ask Camilla, who's just come back to her screen and is a mathematician, as you are, Chris, if you've got any comments on that.
Yeah, sorry, Tesco had arrived, so I had to go pick up stuff, but I was listening. I've got my earbuds in. So I think the different aspects in this, well, there's how the government behaved, there's how the scientists have behaved, and how much trust we have put in each of these bodies, I think. I think the imperial model, the one that has been used from the beginning to drive the response to the pandemic, is actually a reasonable choice if you want to understand the potential impact in the worst case scenario on a national pandemic. And I don't believe the scientists were ever intending that to be the real model. The saying that Chris said that some models, well, all models are wrong and some of them are useful. I would say that all models are useful. It just depends on the decision maker and how they use that model. And that's where I think the government has failed. They haven't listened to the scientists. They haven't listened to the other modelers that are coming on board as new products have been developed, new models, new everything else, essentially. They were too stuck into finding the answer they wanted, or at least that's how it appears to me. And from hearing on how my colleagues are working with the government, that seems to be the case. Politics should never drive a response to a pandemic. Science should, like they did in New Zealand. That was the correct response from my point of view. So I think the imperial folks have been put in a really tight spot, not being allowed to release their model quite early on to get adequate peer review. It was a flu-based model, which was probably the best assumption we could have made at the time around what was going to happen with COVID. And as we learned, other models have been developed by other universities and other countries as well. And everyone has decided to follow different modeling strategies. Part of the failure on the response has also been around data sharing and availability for local authorities to actually construct their own local models. We are, 12 weeks after lockdown, and we still don't have access to test and trace data to actually be able to monitor the potential outbreak sites. That is definitely a failure of the health system and the way the government is managing the data overall. It's not unwillingness of the health system to share data, but unwillingness of the government to actually collaborate with local authorities, thinking that if they were to devolve the power to make decisions to local governments, they would be unlikely to actually adhere to any of the instructions from central government. So politics got on the way of science, I think, and there's still some scientists not behaving as well as would expect as well in this environment. I think this is a whole new discussion, a whole new talk, and I'm sure politics and risk is definitely a topic that I don't really want to touch.
Politics
much longer around.
I think there's a question from Kirsten or Ed. Kirsten and Ed.
Thanks, I wasn't sure if that raised hand was going to work. Chris, thanks very much for your talk. That was incredibly interesting. I wanted to pick up on one comment you made around when COVID hit and the fact that you had to essentially make a determination between continuing to lend to support the economy, potentially at the expense of your own shareholders, ultimately your bosses. And it got me to thinking, to what extent do you therefore have to change your own internal standards around lending and conducting business, and particularly when it comes to making a decision that won't actually benefit you directly in supporting the wider economy, rather than making decisions that are in your own company's interest?
Yeah, good question. I think it's a bit hypothetical, because the government did step in, and they stepped in very rapidly to move to create these CBILS loans and the bounce back loans. And the government is standing behind those loans. So the bad debts that may come out of those loans will be underwritten to a different extent in those two approaches, which then allows us to step forward and do the right thing by the country and the right thing by our shareholders. Because it would be a lot more difficult to lend to someone as you go into something, into such a global downturn, if there wasn't a national response to support you. The best thing to do would probably be to hibernate and then wait till it started to look at the spring came. There were some green shoots, then get out and lend.
And was that guarantee an unconditional guarantee, or were you expected to uphold certain lending standards even with the government standing behind?
Yeah, the different schemes have different rules attached to them, and they're all well publicised on the. If you go to the Treasury website, you can see all the different schemes. But essentially, the government stands behind them if you've underwritten them or you've followed the process that they agree with you, and they're being administered by the British Business Bank. So it's a very formal relationship you enter into when you're doing this, and there's a lot of reporting about what you've done and how you've done it. The regulator is obviously quite keen to know who's taking a payment holiday at the moment. They're very keen to understand who's taking a CBILS loan, who's taking, so they get a sense of how money's moving into the economy and how that's actually going to support the economy and bridges over this COVID emergency. Because this isn't like a normal downturn. This is a shock through a system. And no systems don't respond well to pulse shocks. They don't. They like things that are gradual and appear over time. Suddenly, this is hit. I can't go out and, my hair's very long, and the hairdresser's probably missed 3 haircuts from me. That money's not coming back to him. It's very difficult, and there's a lot of responsibility on all of us to make sure that not that only that we keep ourselves healthy physically, but that we also keep the economy moving. Spend, spend, spend. And back to the point about demographics, it's quite clear that isn't happening, because people that have got money and have got jobs are now saving at a much faster rate than.
Okay. You're slightly frozen on that note, Chris.
Are now actually finding it very much more difficult. So, the gap between the haves and the have.
So you're coming in and out again. Okay, David switched off your video. So do you want to just finish those remarks, Chris? Have we lost him, David? Oh, Chris, I think we try speaking again. Okay. I think we may have lost Chris just at the last moment. I was actually planning to bring this towards a conclusion. It's 11 minutes past 7 by my computer clock. And it's been a really interesting session. For many of us who are not part of this world, I think it's been an enlightening insight into the world of maths and what it means to be a risk officer, but also actually just the way that Chris has helped us make the connections between the risk that he has to manage that actually feels, you know, very scary and very serious and very big and involving lots of numbers. But actually there is a continuum between what he has to do, what the government's been doing, what all of us do in everyday life as we decide whether we're going to go shopping with a mask, without a mask, if we're going to keep to 2 meters or 1 meter, all of these things that now are everyday calculations that each one of us has somehow to make. So Chris, I don't know if you can hear me, but just want to say thank you very much on behalf of all of us for just a very interesting presentation and discussion. And we look forward to seeing you in real life, we hope, in due course, in Chad when that's possible. So thank you very much, everyone, for coming tonight. Lovely to see your faces, lovely to hear some of your voices. And we look forward to seeing you again soon. So bye, everyone. And thank you, Chris. Sorry, I don't know if you heard any of that, but thank you very much. Really enjoyed it. Great. Good.